Coming up in today's episode, how has a 116-year-old luggage company become cool? They have bought a portion of Shay Mitchell's luggage brand, Beis. This is a really good example of why sometimes buying a business rather than building a business is the way to go. So we'll be unpacking that.
Selena Gomez has been sued for fraud. So investors put in millions, and for 3 years there was absolute radio silence. Is it a case of where there's smoke, there's fire? We're going to dig into the Wondermind lawsuit.
And finally, an AI company that did not exist 5 years ago is about to IPO as one of the biggest tech businesses to ever go public. This is The Curve Weekly, where we read the finance news so you don't have to.
I'm Vic Harris, a finance professional who's had a career making money for other people.
And I'm Sophie Hallwright, ex-television and radio producer who was sick and tired of not understanding the economy or how to grow my wealth. So we started this podcast.
But before we dig into it, here's a word from today's sponsor.
This episode of The Curve Weekly is made possible thanks to Pathfinder KiwiSaver Plan, helping you invest alongside your values.
We're really excited to bring you the ethical hotline where you can ask all your tricky ethical questions.
Each month, Pathfinder will answer the most interesting, popular or polarizing question. To submit yours, follow the link in the podcast show notes. Pathfinder Asset Management Limited is the issuer of the Pathfinder KiwiSaver Plan. A product disclosure statement is available at pathfinder.kiwi.
So wholesome, getting sunflower plants for your birthday.
I know. So Emily, our producer, knows I'm obsessed with sunflowers, and she's grown 3 giant sunflowers for my birthday present. They were just sitting on this chair when I came in, and I was saying I actually think this is the best gift anyone's ever given me. Because I want them, but I don't know how to grow them myself.
Yeah.
Okay, I'm going to read my birthday card. Dear Soph, the biggest happy birthday to you, Leo Queen. We hope you have a week filled with love, celebrations. You bring endless loves to us every day, and we love working with you. Never underestimate the power of what you have achieved. You're an inspiration, and it's an honour to help you bring this mission to the world. Here's to the next 10 years and beyond. All I love, Lucy, Emily, Vic, Gio, Kate. Thank you, guys. That's so cute. Okay. How are you? I feel like I haven't seen you. There's been many things going on.
It's been a wild month.
Wild ride, hasn't it?
Wild ride. PSA, public service announcement. We have sent an email to everyone in the club. If you haven't got it, check your emails, check your spam, about joining the fund. And yeah, for anyone else that wants to join the fund, go ahead.
God, so many people are investing. It's so exciting.
Yes.
I have decided I'm going to start automating £400 a month.
Nice.
As my recurring amount into the fund.
Love it.
I might even film myself setting it up. So anyone that's like, I don't know how to do this, they can see.
Great idea. Great idea. Love that.
It's quite an easy setup.
It's super easy, yeah.
I feel like I often avoid anything admin related because it feels like it's going to be a big deal.
Yeah.
But getting your money in the fund is super easy. So I might just film myself doing it. I don't know if this is just because all of a sudden the research is phenomenal. Or
is it me?
Maybe, yeah, I think it's you. Or if it feels like the landscape with the investing space is just changing so much.
It comes in waves, I think.
Yeah.
Sometimes I'm sitting here talking about interest rates, trying to make it real fascinating. And other times we've got Shay Mitchell and Samsonite and, deals with Selena getting sued and all of that.
It's all go. So Shay Mitchell, for anyone that doesn't know, Pretty Little Liars, does that mean anything to anyone? Did you watch that show?
Yes.
It's like a breakout series.
Was it? Yeah?
Yeah,
Okay.
It was like 6 seasons of Who Is A, and it was like tormenting these teenagers about like who was sending them weird messages, and I was completely addicted to it. She's one of the main characters in that show.
She's also in You.
Yeah.
Yeah.
Later on.
Yeah.
So she's an amazing actor.
Yeah.
But she's turned businesswoman.
So yes, she has created this company called Beis, and it is a travel bag brand. Now, this started because she had so much frustration with traveling and like things not fitting and just travel bags not being created for women. So she was like, you know what, I'm going to create my own. And the reason it's in the news today in the Curve Weekly is because Samsonite, one of the oldest suitcase companies, has just acquired 85% of it.
Samsonite is one of those odd ones where it's still, even though it's old, and I know they're not that chic, for some reason it still feels like quite a solid brand when I think of Samsonite, which is incredible given how long it's been around. Was it 1910 that it started?
Yeah, 100 years ago. This is a really old, historic brand buying a younger, more feminine brand that is attached to a celebrity. And so it's all about how do you diversify or I guess increase your reach without diluting your own brand? And so you purchase other brands that already cater to that demographic, rather than if Samsonite went out and did like a new range of like trying to be iconic for Gen Z and didn't quite land, instead of like there's like the whole buy versus build. Why don't we just buy someone who's already in market that has done a really good job of hitting the demographic we want to hit?
I've just signed up for the wait list for the expandable backpack in maple. What
Nice.
we've been talking. No, can I play a clip as to why I thought I was going to start a backpack brand in the last 24 hours? Because I was like, I need to get on a line bike constantly. I'm sick of having a side bag that almost kills me every time I get on a bike. I've got out of whack back problems. I'm like, why am I not just putting a backpack on? There's no cool ones. And her backpack's really cool. Listen to this.
As a woman,
Yeah.
deciding to wear a backpack instead of a side bag is the highest form of self-respect. Because when you wear a backpack, you are essentially choosing good health, spinal alignment, no more shoulder pain, at the expense of looking ugly. Because let's be honest, I have not seen a backpack that I'm like, oh, she looks really cool. Stylish. Like, even the coolest.
You get the point.
Yeah.
And I thought, genius. But actually, this is quite cool. The thing about this, and the reason that this purchase from Samsonite is really interesting, is it stems off the back of all the conversations we're having about Alex Earle and her VC. It's the idea that there's all these celebrities that have distribution. Even Poppy, you mentioned in the podcast last week, that was one of the drink brands that was bought by Pepsi for $2 billion. Alex Earle owned a percentage of that. Like,
Yes.
think about how many drink brands there are. It's not as though you look at drink brands and think,
Such
do you
a
know
crowded
what
space.
Do you know what we're lacking? Drinks.
Yeah.
Never.
It's about
But
marketing. You
It's
could
about
sell
marketing.
toilet paper as long as it's got good marketing.
This is a really good example of she hasn't done anything. I mean, yeah, the backpack's kind of cute, but it's not as though it's the coolest.
It's not
backpack
revolutionary.
or-
It's not like it's
No.
a circular bag instead of a square one, or circular suitcase instead of a square suitcase.
It's kind of standard,
yeah.
but it is a little bit cooler.
But Beis has generated $210 million in sales last year, and it was bought for that price. So it was bought for what we call like one-time sales, which is pretty conservative.
Because normally it's way more than that, right? Like 4 or 5 times.
It totally depends on the industry. Like tech, if you're like growing massively, which we're going to get into soon when we talk about Anthropic IPO, if you're growing your revenue like super, super fast, then you'd be on a higher multiple. If you're but one time's very, very conservative. So they kind of got a bit of a steal, but she still does own 15% of the business. So she'll still be incentivized to continue growing it, I assume, in some sense. But
I also wonder if they're consolidating where and how they're being produced, because it could also take her costs down massively by getting access
100%.
to Samsonite's factory or whatever.
yes, yeah. The CEO of Samsonite explicitly said that this deal would expand its reach among younger, mostly female consumers. I feel like this is probably the 5th story we've had on the Curve Weekly of companies and brands trying to target women.
Well, do you know what it is?
Everyone's trying to get to us.
I think they know that we have money to spend.
Yeah.
That we are not stupid when it comes to marketing. We're becoming way more conscious of how and who we're buying products from. And we trust people that we see marketing in the same way that Shay Mitchell has done with her brand. Like it speaks to us because she kind of is us. And guys that try and emulate that by building their own businesses or products struggle to sell to us because it's not relatable.
It's the classic, like if you can't beat them, buy them, and it's like Samsonite, you're right, could try and target females and a younger audience. Pretty impossible for a company that's been around for a very long time. And they could launch a new like sister brand or a subsidiary or something like that. Or they can just buy Beis, which is exactly what a lot of companies have done. Facebook did it back in 2012 when it bought Instagram. They bought it for $1 billion.
Which at the time, though, would have sounded like a lot of money.
At the time, massive. Yeah, it's now, because it's within Facebook, you don't actually know, but it's estimated to be about $100 billion now. What an absolute steal.
This could be a scenario where we look back and think, wow, that was an absolute steal. Now
It's
the
worth
revenue...
$2 billion or whatever. Yeah. Yeah, but it happens quite a lot in businesses. They think, okay, well, how long would it take us to, create a brand and target a new audience, and will it cannibalize our existing brand? Like all of that. And yeah, it's been done very successfully in the past.
Someone was saying the other day, you probably know more about this, that Google, Alphabet, had the equivalent of ChatGPT before it was released, but chose not to release it because it was going to kill their Google search.
Yes, it was, oh my God, Deep Mind.
Yes.
Yeah.
Oh my God.
There's a great story about it, and it was started in the UK actually, which also frustrates me because I'm like, the UK is not the most innovative country, but yet
It had this amazing
we
idea.
were miles ahead in terms of AI and what is it, agentic AI and all of that. And then Google bought in it. Yeah, it was this whole thing.
You can buy companies, you can create companies. A lot of businesses are scared to either buy or build something that is going to cannibalize their existing business. But you have to be brave, because if that's the way that business, products, consumer behavior is heading, the business is doomed either way. You may as well be the ones that are buying or building rather than waiting for that to happen by another business. So I guess this company can see travel's on its way back up.
Yeah.
There is such a status symbol, or it's almost, I would put it in the same bracket as American Express cards. And there's this sort of feeling of luxury, or it gives I am expensive by traveling with something that looks
It's
quite
a statement
nice.
piece. It's like Rimowa's are the like premium luxury suitcase. But Samsonite, a bit of history. So yes, it's been around for 100 years. It was founded in the US. It actually listed on the Hong Kong Stock Exchange, and it's still listed on the Hong Kong Stock Exchange because the thinking was that there was going to be this growing, Asian consumer, Asian travel trend. And so nearly went bankrupt in 2001, post September 11. Nobody was traveling.
Who runs it? Who's the CEO?
Kyle Grindero.
Gendro.
Yeah. He stepped in 2018. So in 2018, there was this company that came out with a short report. Now, this is a company called Blue Orca Capital, and they are a hedge fund, and they short companies, and that's how they profit. So they profit when a stock falls. They are incentivized to put out these like investment reports effectively like ridiculing companies, and they put out a report saying there was accounting irregularities, overpaying for acquisition.
Oh, they're trying to shit all over a business.
They're trying to shit all over.
Yeah, price goes down because they've short it,
and then they buy back the stock at that lower price, and they're like, boop. And usually, a lot of companies, what's the saying? Where there's smoke, there's fire. It's quite damning reputation-wise to have a big short report come out of you, because even if like 9 of the things aren't correct, one of them is. It's like people are now looking at you anyway.
It's so true, because it doesn't actually matter what's true or not. People just remember the thing that was sticky or gossipy, even if it's not true.
Like Nike still to this day cannot shake the fact that it had.
I mean, that was kind of true, to be fair. So
yes, but it's like even all the like changes they've made, like everything, you've still got this like.
That's why when people say there's no PR that's bad PR, I'm like, I really disagree with that.
Yeah,
and something can damage your brand infinitely and forever, especially with wrong, false information. Anyway.
So they had that report come out, and the CEO came in, and he's still there.
So he would have made this decision.
Yeah, and there's COVID. They've had COVID. Like, they've had some pretty shit times since they've been listed, but they're still around.
Do you know, from a business model perspective, when you look at businesses and you think, oh, there's so much that this business can grow, people don't buy that many suitcases. I've bought a Samsonite. It has a lifetime warranty, so I'm not exactly going to be purchasing again and again.
Yeah.
Sort of surprises me that it has so much space to grow, or that it still exists. I mean, I know there's a lot of people that don't own suitcases, so of course, but it's a one-off sale. I don't know. I wouldn't look at it and think, what a banging business model.
No, but like you said, travel is booming, and also influencer travel has been absolutely massive. So
can we be put on a flight for free anywhere?
Oh, I know.
I
will influence people. Yeah.
Any airline, any destination. Get me on a plane.
Give me a suitcase.
I'll have one of those hand wipes. I don't even care if I'm in economy. Just send me on a bloody free flight somewhere. It's too expensive for me. Because I saw actually Lucy, our social media manager, linked when she read this story. She was like, oh my God, there's so many people though that are being paid for to go and market brands. There was this New Zealand and Australian duo, Riley and Jazz, and they were sent on Emirates. And they did this really great video that went quite viral, being like, we're on Emirates. I was like, can I go on Emirates?
Yeah.
I've just booked my £1,500 one-way flight on Emirates.
Oh my God, I know. It's so expensive up here getting home.
Help.
I'm poor.
But yeah, they pay so much to get people to market flying on certain airlines.
But it seems, and look, I know it's probably people that disagree, but like it's a way to get to an audience. And if it is, it depends on the influencer, but you know, it does seem genuine sometimes, that it's authentic to a point.
It also doesn't matter if it's authentic.
Yeah.
Everyone knows they want to fly and go somewhere.
Totally.
You know, if the food's great, the seats are comfortable, it worked, and I've got Emirates in the front of my mind. Like, there was US travel companies alone spent $1.5 billion on social media influencing in 2025.
And American companies paid influencers $11 billion last year. So, like, there is a huge influencer economy here happening. And then you're combining this with travel. I think this is an incredible acquisition from Samsonite in terms of, like, they got it at a good price. Shay Mitchell is tied in as creative director. So she is going to be staying there, you know, to see it through. And that's also in a space that is absolutely booming at the moment. And there was a graph that I will put on the screen, but it shows like just the absolute takeoff in travel in the last few years. Yeah, there's been a pent-up demand from COVID still.
Pent-up demand sounds a bit horny.
It's a term.
Pent-up demand.
Pent-up demand.
I don't know about that one.
It's like gyrations of the market.
I think we could have not used that in that context.
Pent-up demand. It does sound right. Yeah. Oh, God. And they're also, these brands are getting really creative as well. Like, they're not just, well, some of them are, like you said, you know, putting influencers on planes and getting them to do a story about it. It's like they're really getting influencers and their friends and like creating these like experiences. Like, they did this acquired style as like an influencer in the US. They did a brand paid for a whole hen's do for her and her friends to fly. I don't know where it was, but like, and then the Aloe super yacht, they got like Alex Earl, Jake Shane, all their friends. How fun.
I had an idea.
I have friends.
Yes, I've got lots of friends. We've also got many people who listen to this podcast.
Yeah.
Imagine if we could get the curve, everyone who listens to the podcast on a flight and over the loudspeaker, we're just talking about investments the whole time.
That'd be great.
Now, if you'd like to invest and grow your money, hello, your food is about to arrive.
Oh my God, that'd be great. Like an hour or 2 hours of just like forced education.
And then we all have a holiday somewhere cool.
Yeah.
Genius.
I think great. We could do it. We could do a 2-hour podcast.
We could do it for
between
24
takeoff
hours.
and landing.
We could do 24 hours, Vic.
Yeah.
We could. I will not sleep if it means that we could get 1,000 curve people on a plane somewhere cool.
I need a lot of coffees talking about finance for 24 hours.
We could just go have a quick nap because we'll probably be in business and we can lie down. In New Zealand, hello?
Instead of a live
listening?
show, we do a live air show.
Oh my God.
Let your money grow sky high. And like, we
Love
could,
it. Yeah.
Planes, investments go up and down, but like there's always some turbulence, but it's going to be okay.
And you land at the destination in the end,
Yeah.
i.e. more money and you're at your retirement amount.
If anyone thinks of any other good taglines, please just comment. Yeah, comment
Air
below.
New Zealand
It'd
will
be
be our
great.
preference. We're open to Emirates. We will actually go Malaysian Airlines. We'll do any, actually.
We
I
are
think.
promiscuous airline.
Yeah. Singapore Airlines.
Singapore.
Anything.
We are ahead of the
world
trend.
first.
Not just friends hanging out and traveling. We are
And we could
doing
get
one
Wi-Fi
step further.
on the plane so people could action their financial, their investments, their budgeting plans while they're
And
in
we
the
are
air.
trapping them there. They're not getting off until they've invested.
Yeah.
God, I think
It's a financial
that's
retreat.
absolutely not legal, but yeah.
Moving along. Okay.
Sorry.
Coming up after the break, we are going to be diving into kind of an adjacent story. Selena Gomez is being sued.
Yeah.
It's almost the exact opposite of the acquisition that we've seen with Shay Mitchell in the sense that I'm not going to give too much away. First, we've got a word from today's sponsor. It's one thing to invest based on returns, but what if a company just does not sit right with you? Like the CEO gives you the ick and you're wondering if you should sell your shares, or if you're weighing up the pros and cons of investing in weight loss drugs, sometimes it can just be really confusing to navigate.
Ethical investing isn't always that straightforward, so we've decided to bring in the experts. Pathfinder's team specializes in this kind of investing and are going to help us and you navigate this really important space.
So each month, we're going to dig into the most interesting, popular, polarizing questions. If your question is picked, you're going to feature on the podcast, which is so fun. But also, if you want to remain anonymous, that's totally fine.
So you can submit your question to the Ethical Hotline via the link in the podcast show notes. And thank you so much to Pathfinder for making this episode of The Curve Weekly possible.
Pathfinder Asset Management Limited is the issuer of the Pathfinder KiwiSaver plan. A product disclosure statement is available at pathfinder.kiwi.
Selena Gomez, she's been in the news. She has been sued for fraud by investors who say they were misled about her mental health startup app, Wondermind.
Could we explain what the app does? I don't know anything about this app. And I've also never seen her market it, which is probably this whole story.
Yes. So the vision was for Wondermind was to be a mental health ecosystem. So newsletter, podcasts, TV shows, apps, films, and kind of they were modeling it off Reese Witherspoon's Hello Sunshine, where she did the book club and everyone talked about it. And so, but for mental wellness. So she's obviously gone through her own mental health struggles. And so she was like, look, this would be a great platform. It started in 2022. Co-founded by her mother, and another entrepreneur. They raised about $5 million.
Wow.
And the business was valued at about $100 million.
Huge.
And then it all kind of started to unravel because there was a group of investors that came on board that invested about 1.2 million of that 5 million.
So they were probably the lead investors.
Yeah, and they were told three things. They were told that Selena Gomez would be active in it and building it and promoting it. And she has over 100 million followers. Like,
she's one of the biggest, I would say, online personalities in the world.
Yeah. And the entrepreneur that they're bringing in was described as like an executive that had already got partnerships at JP Morgan and Fidelity, like had, promised the world. And that there was a lot of advertising deals, cover stories, an app. Anyway, what the lawsuit is saying is that Selena Gomez signed a contract and completely ignored it. The partnerships weren't there. The app was never built. Just things that were promised were not delivered. And there was actually last year, The Cut did a article on the business and exposed effectively a lot of things that investors were like, what the F? So anyway.
When I first saw this on social media, I actually think that this is just clickbait. This can't be real because it would be so damaging for her brand, and it feels really off-brand for her as a public figure who has been open about having bipolar and other mental health illnesses to say she'd do something and they're not. I just assumed there's no way there'll be truth to this. It must just be a clickbait story.
Well, yes, her lawyers are calling it like completely false. But investors are like, it was 3 years of silence and their money just like slowly disappeared. And I think this is kind of, I guess, one of the learnings is that having a famous face attached to a brand doesn't always necessarily mean they're going to be involved. Like there needs to be, you need to look under the hood, and like with the Shay Mitchell example, like she is going to be in there as creative director because there's so much brand equity tied to that person. And the fact that the investors probably bought into the fact that yes, Selena has huge following and she's going to be involved and all of that, but to say that but to not get it in writing because
it seems so stupid though. That seems like the most obvious thing any investor would ever ask.
And if it was in writing, then that's when
she's in trouble.
Yes, yeah. But if it wasn't and it was just okay, this is she can, because you can co-found something and not have anything to do with it, day to day, and therefore she could just slap her name on it and not have anything day to day. So yeah, it's a hard balance, but also as an investor, the fact that they say there's been silence and no updates and things have just like unraveled. Like you are entitled to updates. Yes, you're not a public company. This is a private company. So therefore, there isn't, I guess, as much in terms of financial updates that you are legally entitled to, but you still are.
But it would have been in the shareholding agreements that we will update monthly or 6 monthly or whatever it is. And it's different because obviously if a company is public, if they are giving false information or they're not keeping investors updated, it's so much more scathing. Whereas this would have all been happening privately via email directly to whoever these private investors are.
And it's like communication is key. It's like, even if you have invested in a private company and things aren't going well, like just let your investors know. Or,
but do we know that this is true?
No. But I'm meaning also, if you have invested in a private company, push for communication, get things in writing because I don't know, unfortunately, if things do go tits up, it's at least you've got it in writing. You just never know. Like all these investors would have thought things would have gone swimmingly. And so it's kind of like with prenups and things. Like, yes, things are great right now, but you also have to protect yourself when it comes to, you read documents like shareholders agreements, reading prenuptial or contracting out agreements. Like, always just be a bit pessimistic. Just be pessimistic.
Me every red flag in this.
Yeah, exactly. I am the person investing in this business. What are things I should be looking out for? Like,
I just find it really hard to imagine that this is legit, because the investors that would have put over $1 million into this surely are somewhat of an experienced private angel investor. You would assume someone that has that much cash to put into one investment. Most high net worth individuals would put, 200 grand.
yeah.
500 max. Generally, above that is family offices.
Yeah.
People that are more professional private investors. So it kind of blows my mind to think that someone put money into a business like this and didn't read the docs, if this is true.
Yeah, exactly. And I think there's things about like people saying that her mum was like sleeping at the office, missing meetings without explanation, payroll failed to go out twice. This app,
big deal. Payroll not going out twice, come on. That's not that big of a deal in 3 years. I mean, it's not ideal, but it's also not like... I think there's way bigger. It could have been an accident and it was a day late,
this app was apparently supposed to be coming for years. So I think it's the devil will be in the detail in terms of what was said and what was delivered and all of that. But also, I'm sorry, but the reputational damage from this, like if I was an investor, I'd be... That's the most frustrating thing, right?
You mean not for Selena, but actually for the people that have invested in the business. They now know that this whole business has been tarnished by the story. Yeah. So even if it is creating an amazing ad and it was about to launch, what the story is doing is going to damage their investments so heavily.
You're saying, no PR is bad PR, but it's like when a pretty damning report...
I'm saying there is bad PR, and this is bad PR.
And also on the side, investors are seeing her rare beauty brand be worth $2 billion and going, hang on a second, what about this other company that you started and you're pouring all your effort and time into... You're backing the wrong horse. Sorry, the investors are backing the wrong horse. But anyway, so just two stark contrasts. And also, I think the lesson for this is if you are investing in a business where the founder is so integral in its success, make sure there's like watertight contracts in that, because I reckon if you pulled Selena out of this, it'd be a very different business you'd be investing in. And I think that's probably
I would say most people who are investing in businesses where there's a celebrity attached, all they see is marketing, distribution.
Yeah,
doesn't really matter what it is. I think that it kind of goes back to the example of Poppy and that drink brand. By the way, I think the drink's delicious. I'm not saying it's a shit product, but it's so much about the cap table, the marketing, who's involved, what is that public perception? Because someone else could have started Poppy and had no celebrities attached to it, and the investment will be very different.
Yeah.
I think that the world we live in now is like it's very easy to create a product. It's really not easy to shift product and to sell it.
So much in our face, right? Like we've fed so many different ads and brands and products that to cut through the noise, it needs to be in front of you by someone that you trust or you admire, or to get that cut through is really important these days. And this is just one example where it hasn't quite worked, unfortunately. So, Soph, with your sunflowers,
yes,
what did I tell you off mic to do to make sure they survive?
Water them. Claude, how to put them in the ground so they don't die.
Yes. Well, great segue. Claude, or Anthropic, the parent company, it last month hit $65 billion in revenue, and that is up from at the end of 2025. It had a revenue run rate. So like it's, if you take that revenue and you times it by 12, it had $9 billion. So it's gone from $9 billion to $65 billion in the space of 6 months.
That's crazy, because when we were talking about them going public, everyone was quite skeptical about their business model, if they were going to be able to make money. They were really valuing themselves so much. And there's not a lot of AI companies that are actually making money. So the fact that they're actually nailing this is crazy.
Well...
Or were they not nailing it?
They're making money. They're making $65 billion, but they're spending a lot of money.
How much are they spending more than that?
They're not profitable yet.
Oh.
But their growth, and this comes back to what we were talking about before with the 1 times revenue for Beis. This company is growing its revenue. It's growing roughly 80 times growth in that like 6-month window. It's gone from 9 billion to 65 billion. They're growing their revenue by about 80 times in 6 months.
That's huge.
Like, what value do you put on that? Well, it's looking like they're going to be a $1 trillion company when they IPO at the end of this year.
Wow.
Making it the largest tech IPO in history. So SpaceX was about 1.8 trillion. So this is massive, massive, massive company. We also have OpenAI supposedly listing as well. But this company was only founded 5 years ago, and it is now estimated to be worth $1 trillion. It is on track to out-earn every publicly listed software company except Microsoft. So it is generating more revenue.
Do you love that fact?
I know. Go Microsoft.
In case you missed it, because obsessed, always has been, always will be. So what we're getting at here is we've done nothing in 5 years, and Anthropic has made a $1 trillion company.
That was not the crux of it, but yeah, you're kind of putting up what I'm putting down. It is.
That's insane.
Yeah. And it's a really interesting company because it describes itself as a public benefit corporation. So it is your typical company. It's not a charity or anything like that.
As in it's profit making, and it is trying to make profit.
It is profit making, it is tax paying, but being a public benefit corporation means it's legally obligated to consider more than just profit, which I'm really happy to hear because AI companies, I'm kind of starting to be a bit nervous. So the best way to think about that is like, it's like a B Corp, but with actual legal teeth. So like legally, it kind of has to be B Corp teeth. Yeah.
Love that.
Yes.
So the idea here is that there is some kind of morals or parameters that it has to adhere to be able to claim that.
Which is what the issue was with DeepMind and Alphabet, and they wanted it to be, morally, there was morals associated with that. They had like a moral board member that their sole job was to make sure that it didn't get out of control. And then I think that all kind of got deprioritized when Alphabet came aboard. Or anyway, so that was kind of the issue going on there. But this is, if we look at that revenue growth, so you've gone from 9 billion in December, and when we talk about annual run rate, you're taking the month, the amount of revenue that you made in that last month in December, and you're timesing it by 12. So you're going, okay, cool. That's like the annual amount, considering what we're earning in December.
I might just run that back to you.
Yeah.
So the annual run rate is kind of like how much is someone earning over a 12-month period?
Yep. So I take my salary in December and I times it by 12, and that's what I'm earning. And because this is a software company, and it's got that recurring revenue and that predictability because we pay, monthly subscriptions, you can see, it gives you a level of predictability of what the next 12 months is going to be. So that was 9 billion in December. It is now 65 billion. So
do you mean based on the growth they're seeing, if you then project that out by the 12-month run rate, that's what, 65 billion?
Yes.
Holy shit. Do you think that's realistic to grow again by that much?
Well, so the current revenue, so it's moving so fast that people are expecting that in 2028, it's going to have about 200 billion as its revenue kind of figure. So how the hell do you value that in terms of like a multiple of revenue when the revenue amount just keeps growing exponentially? So
it's almost, and I guess an analogy for that would be, in the same way if you would use like a maths equation to figure something out, if you've got A plus B equals C or whatever, there's some kind of predictability. Like the rate in which this is growing is so beyond what you could really put into a formula that it's super hard to look at this business and say how much its value is going to be. Yeah. Because it's unlike anything anyone's seen.
And if I was this brother and sister, they're Danielle and Daniel.
That's right. They're a family
Daniela
business.
and Dario.
Because they left OpenAI, right? And then started the competitor. God, you just love that, don't you?
Also his wife, there's been a bit of scandal with her.
What?
So she used to be married to the Google founder.
Who's that?
Eric Schmidt.
So she was married to Schmitty.
Yep,
founder. She's really hopping around.
She's got a type.
She's really, what's your type?
Billionaire tech moguls. Yeah.
Shit.
Anyway, sorry, that was a tangent. But yes, so if I was to sell my business and I was to go...
Do you mean our business?
Sorry. I was metaphorically being if I had a business and I was selling it.
We're selling the curve.
And we were we were going to, because when you IPO and when you go public for the first time and you list on the stock exchange, you're essentially selling your company. You're selling your company to a whole lot of new investors. So if we were to sell our company and we were growing this fast and someone wanted to value our business on our current revenue, you'd be like, absolutely not. Like, look at how we've grown. Look at how we've grown in the past. Look at how we're going to grow in the future. Why on earth would you value it on today's financials or today's revenue? I want you to value it on the future financials. And if they're just jumping so high so quickly, then that's when your business starts being valued on like ridiculous multiples of revenue.
Is that why SpaceX and stuff was being valued so high?
Because the growth and
it's so hard to even pinpoint that you can be ridiculous with the valuation.
Like people on Mars. Okay, how on earth do we value that? So with this business, they're looking at current, like other businesses that are similar, that are publicly traded, and they're looking at what they trade on in terms of their share price and the value of their businesses versus the revenue they generate. It's like you've got Palantir on 50 times revenue. You've got SpaceX on 41 times revenue.
And that was ridiculous. When that came out, everyone was saying this is absolutely insane. You would never.
And so, but what on earth do you put Anthropic on? People are saying $1 trillion for the value of that business versus its revenue is ridiculous. But if its revenue is growing, then so it's like this whole thing of. And then do you trust the revenue that they're expected to get? Because everyone's drinking the AI Kool-Aid right now. And so it's like, is that actually going to come to fruition? Because if it doesn't, then the whole value of the business doesn't exist. Anyway, it's like,
When it comes to investment as well, it takes months to get things over the line. So if they're going public, this is something they'll be working on now for a long time. So all of those documents in terms of how the business is valued, you know, they might send out documents to investors saying this is what we're valuing it at, and by the time someone's even opened the email,
the revenue's already
changed. So
and that's with any investment. You're betting on the future. You're betting on something that hasn't happened. You're betting on forecasts.
I'm surprised you're using the word betting, given you hate the idea of that.
You know what I mean. You're making a judgment call on the future and what the future's going to look like, and that's why IPO investing in particular is so risky, because you're paying for a story so much right now as a business. Like you know, it's not a Samsonite that's got a track record of, you know, historically showing that it can grow through really tough times. This is a business that has literally been around for 5 years and growing massively, and you wanting to pay $1 trillion for it. But then on the flip side, it's so integral in what we do every day. It's only getting bigger. And so, you kind of have to weigh up these.
I'm on Team Anthropic. I think they should value their company outrageously, and I would probably buy it. I mean, obviously, I will continue to listen to the Curve Weekly, follow your research, then make a call. But I feel like there's going to be a few big winners in the AI space, and they're doing. I mean, I think the Claude interface sucks, but what we've managed to build for the Curve in terms of our own platform using Claude is insane. Saved us money, time. Like, it's what it can do is incredible. And I feel like as someone that's using it and seeing those benefits, I mean, I don't know what it should be valued at, but I probably would invest in this. Not investing advice. Not investing advice.
No. Do your own research.
It's not even public right now, so surely that's fine.
What we're also seeing with a lot of these IPOs, like SpaceX and also with Anthropic, is how the everyday investor is getting kind of outs in terms of their voting rights. So you're seeing these founders come in and they're like, we want to dominate. We still want to have control in terms of what's done with the business.
Elon Musk and SpaceX, he had a whole lot of different rights when it came to how he wanted to run the business compared to other companies, didn't he?
Anthropic's the same. So the founders still only own a small percentage.
But in terms of voting decision making, they're keeping their rights.
They're getting.
I get that though. Think about what they've done and how they. And I know that's the opposite of the point of a public company, is that everyone is a shareholder, so you kind of have a vote. But if someone has built a business that's worth $1 trillion in 5 years, they kind of earned their right to have control over how that business is run, I think.
Yeah, I just think it's...
You disagree?
I think it's the great thing about being a public company is that it is owned by the public. That is a decision you make when you become a public company. We're getting into a world where it's like, okay, well, why even have...
Democracy makes no sense anymore because it's not even being... No one follows the rules. So it does feel weird. SpaceX, when it IPO'd, it had new rules. It was
Yeah.
put into indexes and all sorts, which hadn't been done before. And it's, Elon Musk demanding, I want things done differently for myself. You're basically saying what we're starting to see is that is now becoming more common, where the founders, even though they only own a small stake, they are still controlling. It's not power to the people in the same way it used to be.
Yeah, you just have to make sure that you're very aligned with that founder. If they've got outsized voting and outsized rights, then and you don't have as much of a say, then you're kind of at the whim of what they do, which can be great, don't get me wrong, but it can also be, when you've got an Elon Musk at the helm, it can be very volatile and
But also people change so much. I'm not saying Elon changes. I'm just saying you might invest in a company and a founder and
it's like
be
dating.
aligned.
Oh, he'll change me. I can change him. I can totally change him.
I guess what I mean is when you invest in a founder initially, you might think, I really agree with them and I think they're great. A lot can change in 3 years' time and the way they're running a business can change. So that's, I guess, when you have to keep making decisions on do you still align with the founder if they have majority control?
Yeah, it's just a bit of a red flag from a governance point of view. And yeah, I think it's just like one of the reasons that you own shares in a business is that with part of that, you do get to say who runs it. If you own enough shares, you do get a say on who's on the board and who gets to run it. And so, yeah, it's just interesting that a lot of these, it's becoming quite, I don't know.
It's very ego, isn't it?
And it's very, I don't know, are we just going to see this as the norm now going forward? And it's like the whole point of this, of being public and having shareholders that can buy and sell your stock is so that...
I've got a counter opinion to this. As someone who owns £100 or whatever of Google, I do not sit there thinking, do you know what? I'm going to write to the founder or the CEO and tell them I think that they should do things this way. I don't, as a small, everyday retail investor, feel like I have any power in saying what that founder does. So this sort of news to me doesn't feel like a big deal. I understand if you're a huge investor that has millions of dollars invested in a company that you would expect to have some kind of say, but as someone who is not investing anywhere near that, I don't feel put off investing in public companies based on this. But it'll be interesting to see if this does become the norm. In case you missed it, hopefully you have subscribed to wherever you're listening to this podcast. If you haven't, please do, because it means that every time an episode comes out, you'll be notified. But on Friday, we put an episode out called Is Your Wedding For You or For Instagram? We were speaking to Margie, who's the founder of Veil magazine. We did a bunch of data gathering with the audience a couple of months ago where a lot of people, thank you so much to everyone who sent their details in, basically shared what did they spend on, what did they regret spending on, and it was so fascinating looking through that data. So yeah, we just talk about the evolution of weddings and the spending and how it's changed a lot in the past 10 years. Oh my God, also at the end of this wedding episode, we're giving away...
A wedding.
Not a wedding. We're giving away...
A husband.
Okay, no, it's actually neither of those things. We're not giving away a husband or a wedding, but there is a fun giveaway. So if you listen to that episode, keep an eye on socials, definitely enter. But before we wrap up, we have...
our ethical hotline.
The question that's come through from the ethical hotline, which I wanted to pick for this month, is all about space. We've seen Elon Musk talking about his outrageously audacious goals to get 1 million people living on Mars. It started to become something that everyone is aware is now an investable place or industry. And so this question came through and I wanted us to answer it today. So, Lily, this is from Anonymous. Space exploration seems like an exciting and growing industry, and I would love to invest in a space ETF. But space themes seem to be very tightly connected with defense and therefore conflict. Is there a way to be involved in this industry without supporting the development of weapons and war? For extra context, I currently have a small amount invested in ARKX, but I'm not feeling entirely comfortable with that. Firstly, what is ARKX?
So ARKX, I reckon you say it ARKX. It's an ETF and it's got space defense stocks in it.
So I actually agree. I think space feels like an exciting new, oh my God, is this happening? And I made a joke about it actually to my boyfriend. I was like, oh, how exciting. So cool that there might be, 1 million people living on Mars. And he was like, you can't go outside at all, right? And I was like, oh yeah, it's actually a little bit sad if you think about it like that. But I'd love to hear your thoughts on it.
Yes, I love this question because it got me thinking in the same way as you. I get quite poetic about space. I think of observatories and if there are alien species and like the stars are so pretty, but that's not what we're talking about when we're talking about investing in space. It's just like investing on Earth, but doing it in space. So we're actually talking about the kinds of things that a lot of people are doing on Earth. So like terrestrial activities, things like mining and travel. You mentioned travel, going to Mars. That's just like space tourism. So it's an amazing sector or industry. But yeah, we're talking about way less romantic, way less magical stuff. We're talking about data centers. We're talking about missile tracking systems, all that sort of stuff. So when it comes to the military stuff, there's the question asker is saying like, why are space themes tightly connected to defense? Wow, interestingly, it's because doing stuff in space is really expensive. It's really risky, it's really time intensive, and it takes a huge budget. Who's got a huge budget? Governments have got huge budgets. And then also, often this stuff has dual use. And by that I mean it has like commercial or like civilian utility as well as military utility. So a really good example of this is if you think about like a company that develops satellites, for example, that could be for communication or navigation or observing Earth. The same technology can also be applied to military things. So like targeting systems, battlefield coordination, missile guidance. So what you often see is that governments fund R&D for these space companies. They get contracts from the Defense Department. So a percentage of their revenue is from sales to the military. And then also a percentage of their revenue is from commercial sales to, you know, normal folks.
It's so funny when you dig beneath the surface of something. I'm really impressed actually this person thought to ask this question rather than just saying, is investing in space ethical?
Well, I think people are saying it, right? Like if you go to an ETF and you want to invest in space and you're like, wait, but why is there so much defense in this space investment vehicle? And it feels really unavoidable. There is like some like picks and shovels. So, you know, like the gold rush analogy where you weren't just panning for gold. Some people made money selling people the stuff that they used to pan for gold.
Oh my God. Can I guess where you're going with this? Is it the idea like with AI, in the same way you just think computer chips or electricity, there's a whole lot of other infrastructure that will benefit as a adjacent industry because it's so used in AI. Like Vic's recently talked a lot about water and the investment of water because it's used so much in AI. Is it the same kind of thing?
Absolutely. Yeah, totally spot on. So like infrastructure companies focused on communications and broadband or space tourism or like geospatial stuff for Earth that observes Earth, which can be used for climate modeling. All of this stuff is technology that companies are making and then selling, but you will have usually you will have a little bit of exposure to defense. It can be quite hard to avoid it entirely.
Okay, this is so interesting. And you've done a whole deep dive answer on this question. So we don't have time to get into all of the detail right now, but if anyone does want to read up more about how they can be investing in a way that's ethical, but also they want to invest in space and they want to understand the nuances there, they can read your full answer. We've put the link in the podcast show notes. So thank you so much for doing the research on that, Lily. And if anyone else has a question after listening to this and you're thinking, oh my God, I'd really love to hear a deep dive or an explanation on a different sector or anything that you are, wondering, is this ethical? We'll be answering a question every month with Lily. So you can find the ethical hotline to submit a question also in the podcast show notes. The views expressed by Pathfinder via the ethical hotline are of a general nature and are not specific to Pathfinder's product. To learn more about Pathfinder and what they do, please visit pathfinder.kiwi. Have a great week, everyone. We'll see you on Wednesday for our episode on... Oh, we're actually talking about Emma Greed on Wednesday's Curve Weekly. Yep. She's coming. She's not coming on the podcast, unfortunately.
But we are doing everything we can to get her on.
Exactly. Yeah. Okay, bye.
Bye.
Thank you so much for listening to the Curve Weekly. Make sure you hit subscribe or follow wherever you're listening so you're always up to date with the latest finance and investing news.
And feel free to leave a comment to let us know what you thought about this episode because we would love your feedback.
We've got new Curve Weekly episodes for you to listen to every Monday. But until then, listen to Erasing the Curve. These are our in-depth podcast episodes where we chat about all things money.
We're also around all week on socials if you're hungry for more Curve content, and all the links are in this podcast's show notes. We hope you have a great week, and we'll catch you for the next episode of the Curve Weekly on Monday.
Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.